Good morning, everybody, and this is your S&P 500 day trade setups for today. So if you're watching a Telegram channel, we did call a trade which promptly got stopped out. We'll get to that in the lower time frames now. For now, complete confusion. I think, we've got a energy crisis going on, and I actually saw some satellite photos yesterday of not really an energy crisis for the lack of raw material, but the ships can't get into ports for some reason, and more than likely COVID protocols or whatever they're calling them. So that's the first thing, and then there was more noise out of China around the bond market in China, and then the third thing obviously is the tapering fears all of a sudden came back. So we do have data coming out. We've got CPI data coming out, I think, tomorrow. We've got earnings season starting to kick off. Personally, I think market's just in limbo at the moment. And unfortunately, limbo means 500 pip swings, or 800 pip swings, should we say. 797 pip swings. And unfortunately, I think that's the problem at the moment. Volatility is here. The S&P is extremely volatile, and the structure is not being adhered to. So with all of that noise in your head, let's just get down to the levels that we can trade. So 3 hour moving averages are in a bearish move, but and we've got to cross over the oscillators. If we get down to the 3 hour, you'll see we did have a crossover. We had a beautiful bounce, and I waited for the pullback. Pullback to me was should have been around 4,400, which was roughly around there. You can see there was a breakout here of that structure over there. Nice solid close above it, and well, you can see how that panned out. Didn't work out very well at all. And then the last thing, if we get down to the hour, we do have some structure forming. It's after hours at the moment. I'm not going to pay too much attention to that. We do have a fairly solid structure here at 43.28, and obviously 4,300 is going to be the next level, which is pretty much this diagonal trend line. So I think the wise thing to do is actually just sit on the side and wait. Just wait for the volatility to calm down, and wait for some direction to be selected. At the moment, we are swinging extreme levels at the moment. I mean, just the structure here is 800 points. We're swinging 800 to 1,000 points in a day, and that's always it's never a good idea to be trying to trade in that. So we're back below the moving averages again, although the oscillators are grouped quite nicely to the downside. Bit of structure to the left. Not going to hold my breath on that. I have a feeling we would have to bounce somewhere along the line, but if we do bounce, you should probably be capped by that level there. Now, for me, the structure that we had here is what we should be paying attention to, and it's not panning out. So yeah, decision time for me is really just sit on the sidelines. Don't try and jump back into this. It hasn't been much on offer for me this month yet, so whenever you do select the good trades and then they go against you, it's always an indication just to back off and just wait for better structure, or wait for all the noise to get out of the way. I do suspect that the Feds are going to do something soon. They're not going to allow this market to just flounder about like a fish out of water at the moment, which is what it's doing. So maybe during earnings seasons, maybe earnings season pushes us up now, or alternatively, the Fed start jumping in and easing the tapering fears for now. But I think the first thing that needs to be done is the energy crisis needs to be sorted out, because that is obviously driving prices of all goods at the moment, and putting fear into everybody whether they're going to get food. So until we can get that sorted out, I think you're still going to have a big issue. So gas and oil prices are the one to watch. As soon as we start seeing those settle and start coming down, I think then you'll start seeing a different pattern form on the indexes. Anyway, that's kind of my view at the moment. I'm very cautious right now, and we'll sit quietly on the sideline. I suspect we're more than likely going to form some big range, and if you look at all the levels we've got in at the moment, that's the range that we've got at the moment. So I suspect we're just going to muck around in this range up until the earnings season for the S&P really starts, and that probably only mid next week. So first it's all the banks, and then a couple other stocks, and then we'll get to the tech stocks, and the tech stocks are very dominant inside the S&P. Anyway, that's kind of my ramble for this morning. Sit on the sides. We are sideways, and just stay out of it for now until we see some decent structure, and just patience is the key of the game right now. Anyway, hope it helps you, and we'll catch up with you bright and breezy tomorrow morning. Cheers for now.